All right, in this video, I'm going to talk about my top three rules when I trade every day with ATR, average true range. These levels. Market has a breadth, it has a language. If you can understand it, then you can find really good opportunities to get in and make some money off of the market. But I'll also include some other rules. I didn't want to overcomplicate this video, and I really wanted to show you that there's only really three rules that will simplify trading and really protect you. So here, let's go into the top three. Watch your sizing is rule one. It's the number of contracts that you have. When you're trading futures, especially in Q, and Q likes to move a lot. In like ES, doesn't move as much, but has pretty consistent moves. But number one is watch your sizing. You can do just as good with one contract than you can with 5 or 10. It has to be in line with the size of your account and your risk profile. So just keep that in mind. Watch your sizing. You'll kick yourself in the butt every day when you look back and you're like, wow, why did I get stopped out? Why did I did not hold for the bigger picture? I would have done XYZ amount. Rule number two is enter into levels. And you wonder, well, why didn't I have this as number one? I mean, sizing is actually the number one, but number two is the second really most important thing. It's entering into these ATR levels. They're not, they're guides, so you have to know how to play around them, right? And nothing's ever exact. Sometimes you can get some, right at the pivot plays, but you have to understand what time frame you're playing on. So when I say at the level, it all depends on your time frame. Intraday, you have intraday levels, and then you have multi-day levels, which would be like your weekly levels. Number three is know what time of the day it is. Timing is everything. I think it's imperative to trade off of 30-minute periods. It helps break your day in different increments, and so you know where your risk reward is. But hourly candles are super important as well, and so I'll go into that in a little bit. But let's go ahead and talk about all the other rules that I like to have and just sort of follow throughout my day and my trading. The other one is play the chart, not your P&L. It's so easy to just look at your P&L and look at how much money you're either making or you're losing. All that does is it creates emotions, and emotions, it's just human nature to think about money in different ways, because money can buy things. It can, you can lose a lot, and it creates just a lot of emotions. So if you play the chart, then you're actually then trading. You're trading what's in front of you. That goes in line with being not focused on the future or past, but what's going on in the present and where price is in relative, again, to those levels. Identify major support, resistance, and patterns. Like, say, for instance, today is a great example, as in, if you look, if you know where your support and resistance, I'm going to draw a line on this 30-minute because this is the bull pivot, and you'll notice that in the morning we shot up. We opened down here, we shot up. This was major resistance because it was support 2 days ago, or on like Wednesday or 3 days ago, trading days. It did not hold, so this was a look above and fail, and then the next TPO time period, it stayed below, and then it ended up just retracing that entire candle. Then you can see it was trying to establish another support. It could have kept on going because this was a gap, but once again you had a level and it's support until proven otherwise. Well, you would think this is now resistance, but that 5-minute candle, you always have to be careful of that first close, and then when it the second, it ended up retracing that entire candle and then closed back above. So when that happens, that's what is considered a look below or look above and fail. And that's how a support or resistance is also established. It shows that price did not like it being below that, and it's going to buyers are stepping in or sellers are stepping in. So what does it do? It ends up supporting that and then comes back up. And where's resistance again? Well, resistance, I was going to use this bull pivot as a resistance. It just so happened that it actually respected that. So you don't know until you know. And when it actually came back up, it had VWAP to get across above, and then it also had that pivot. And what did it do? Shot back down. And then it came right back into support. They end up buying it back up, and now you had this like consolidation motion for the rest of the morning. What do they do? Not just that. We'll go into time period, but this right here is just how you establish the support and resistance, and how you want to be playing in the zone, in the extreme areas. You don't want to be playing in the road. If you play in the road, in the street, you're going to get chopped up. If you play these extremes and you hold for the bigger picture, then you can maximize on the momentum. So that would be identify your support and resistance. You can see that once again at the end of the day, it tried to break out and it found there was a look above and then fail, and it broke back below. And so those 30-minute candles could not close at that 450 area. And then when it comes to patterns, so patterns, when I say respect them and understand where they're at, here you have a lower high, higher low, and now at the end of the day, they actually broke this. So I'm going to use that into the next day to see where it may go. I'm assuming that what they're going to do is consolidate it in here again. You're going to be playing in this area. If you end up breaking out of here, then that's going to trigger a lot of stops, and then you're going to have a lot of momentum. It's the same thing that happened on Friday. You see how this is a consolidation pattern. It's a lower high, higher low, and then it ended up breaking out of that. So you had a drop, consolidate, and then a breakout, and that's why that was so violent. So that is pattern, support, and resistance. The other one would be don't overtrade. If you end up trading 10, 15, 20 different times and you're just clicking buttons, it's going to get mentally exhausted, and you usually are not going to, in the long run, be ahead. So it's not, as long as you're getting in a good spots, there's nothing wrong with like trading the momentum. So like right here, I would have got in, and then I would have got in here after I sold, and then got down in here and got here, but I want to be trading in between, and I want to be scalping. Scalping, there's some people have that strategy, but if you're trying to learn from me and this ATR strategy, I'm not going to teach you scalping. There's just, it's too much gambling involved. You're just clicking buttons. Here, if you see where the ranges are and the patterns and the strategies around those ATRs, you'll be successful. The other is be aware of your emotions, meaning recognize, do you have FOMO? Is greed there? Revenge trading? That's basically going to kill you. And if you are not aware of, hey, guess what? You get stopped out, you lose some money. You got to remind yourself there's always another trade. You'll make it back, but just find those good entries. It might end up taking another 30 minutes. It might take, an hour. Who knows? You just don't want to be jumping into bad trades. FOMO is fear of missing out. So if you end up chasing, as you saw this candle break down and you got in, if you didn't respect your stops, then you would have just got destroyed here. And then greed, a lot of times greed, when you get in a trade and you see something going in your direction, you might end up like sizing up too big, like 5, 10 contracts, and because you get greedy, you think, oh, we're gonna break out, we're above VWAP, and next thing you know, you get smacked. So not having the right sizing and like just being greedy and not taking your profits and adding too many contracts will also destroy you. Set a goal for the day of what you're trying to achieve it, and then move on with your day. Tomorrow will bring another opportunity. and then revenge trading. Sometimes when you're down too much, like a lot of money, $1,500, $1,000, or could be $500. You want to try to make it back itis. There's nothing wrong with trying to make it back, but as long as you are just trading the chart and you're trading the rules. So just come to a different period. You start getting at a certain part of the day that you're running out of time. Don't try to, like right here, I was trying to force this trade and I was shorting, and then I was wanting to go further and further. And at some point, it just wasn't going to have the momentum. The day was sort of over. So if I was trying to make back my losses, you're better off just like chalking up the day and moving on to tomorrow. You'll get just as many points if you find those right areas. So that would be the rest of the rules. But again, I'm going to reiterate, top 3 rules: watch your sizing, enter near levels, and know what time it is. So I already really went into depth on watch your sizing, but entering the levels was also self-explanatory here too, but know what time it is. This is a great example of how you're able to identify when you might have reversals. So like say for instance, I use a Renko chart because it helps me identify. If you see that at 8:30, this was the open, we opened above a pivot, so this is the bull pivot, it comes back down, so you want to get in as close as you can to the pivot, and then you hold. Your target is here. It could chop around for half an hour, but eventually it probably get there. And if it doesn't and it ends up breaking through and then holding, then you know that the upside is done and it's going to go lower. And then you can always just reassess and then re-enter in somewhere down here for the short. But this is support until proven otherwise. So timing, how that's important is you'll notice that at certain time periods, you see how this is the 9:30 Central Time, 10:30 Central Time, and 12:30 Central Time is super important. And so is the 12 o'clock, because I'll show you the 12 o'clock. So if at 9:30 you see that we are not breaking and holding below, then it's probably going to hold that pivot for the rest of the morning. It has a really high probability. So what does it do? It ends up consolidating above, and then what do? You have a look below and fail. So in this situation, if I was trading this, which I did, when I saw this drop below here, I waited for the pullback, got in for the short, and then when it came down here, I just moved my stop to break even. It should have kept going. This should have kept on going and filled the gap. But what did it do? It reversed. It stopped me out and it came back above. So what does that tell you? It tells you that it's a look below and fail, especially when we're consolidating. Right here, you start seeing this consolidation pattern above and it could never break below. That's when you want to flip. So you go long, and look, this is 10 minutes before the end of that period. So why is that important, that last 10 or 5 minutes? It's because look, even right here, this was 10 o'clock right here. Shot up, came back down. It still never broke. So what does that look like on a 5-minute candle? On a 5-minute candle is right here. So came up. Oh, what am I looking at? Oh, 9 o'clock. Yeah, here it is. The 5-minute candle closed, and then it closed back above, and then it basically shot up and then came back down to retest, and then it ended up coming back up here. So what was I targeting? You got a new TPO, so new time period with new 30-minute period. It's 9:30. So you see the 30-minute candle right here. See how if you look, actually, let's look over here onto the left. See how this is that 9:30? You see how it's a doji, but see how it shot down and came back up. So these wicks tells you that they're buying it. It's the same thing on the next. It was pushing down, and so that's why you had this consolidation. And then finally at 10:30 it held, and then you had a solid 30-minute candle. So you had 2 of these indecision candles, and then at 10:30. Which is another rule, as 10:30 is when, this is the most critical rule when it comes to morning. If you just learn the morning rules and say, screw the afternoon, you can do really well. But it's the 9:30, have we held below? Okay, no, we didn't. It pushed back up. It's the same thing with the 10:30, but 10:30 is also super important because that dictates the rest of that morning, which you have about an hour and a half. So 10:30 is when the European closes. So when the European closes, there's not as much momentum. There's not as much sellers or buyers. There's not many people playing in the market. So what ends up happening? Look right here at 9:20, 9:25, we're still holding. So this was at right here was at 10:50. Here it is. Here's the 10:25, 10:29. We barely go below, and then right at 10:30, we're above the pivot. So anything above this is gonna be bullish until proven otherwise. And what does it do? It ends up doing the same thing. Shoots up, comes back down. Shoots up all the way. And what am I targeting? I'm targeting that 400. It's resistance. It's a resistance until proven otherwise. So now that happens, what happens at 12 o'clock? Why is 12 o'clock important? Because it sets the rest of the day of that last candle of the 4-hour candle. So I deemed morning sessions anywhere from 8:30 to 12:30 Central Time. So 12:30 Central Time is when you can see that the end of this 4-hour candle. This is a 4-hour overlay candle. See this green, see this red, see this green right here. These are the 30-minute candles. That's how I visualize my charts. You can do however you want. These are the same concepts. You can have multiple charts, but you see how it ended at 12:30 and it ended right below. So that could have been disturbing. When I say disturbing, as in the fact that it ended below this, I was predicting they possibly could come all the way back down. This could be a shoot up and then fail and they come back down, and all you're doing is consolidating. But the mere fact of them actually holding above, your trap between VWAP and here, and they were holding this, you just have to watch and wait and see. And then once you see that they break above, then you know that they're playing in a new zone, and the new zone would be up here. But you see how the majority of the move was already made from 12 o'clock to 12:30. I mean, when the period ended, you were already, you're no longer at support. This was major support. Now you're playing in the middle. So that's why you want to be really, really cognizant. I mean, look at the previous day. It's the same thing. If I drew my line right here at 12 o'clock, right here, 12 o'clock, what do? They end up breaking at 12 o'clock, breaking that low. They broke the low, and then let's draw this line at the low. So at 12 o'clock, they didn't see. If they would have came down here and then at 12 o'clock opened, I would have been more inclined to go long, especially because it's near this pivot, But the fact that at 12 o'clock, they kept on dropping it, and now they dropped it below the morning's session's low. And so what does that end up doing? I mean, look how miraculously that is. I didn't make this stuff up. I mean, look at this line right here, and it just stayed below that all afternoon. That was now your resistance. So it broke below the morning low, so that is now resistance. And so any push up, you want to be shorting it. So that is, and that's the reason why, is because it's a new 12:30 right here. Is right here. This is a new afternoon period. All of this, 12:30. All of this was afternoon. So, anyways, that is how you play. What time is it? So again, are you breaking out? That 30 minutes. Look at these zones. 30 minutes. Are you continuing? Or you basically need to establish: are you trading in a zone, or are you trading in a trend? A trend, it looks different than basically trading within a range. A trend's going to keep on. It's going to break above. It's going to hold, and it's going to slowly go up. I'll show you another indicator. I don't like using it a lot because it's an indicator that shows you stuff from the past and not really looking at where you could be planning for the future. But look at this. This is a pivot ribbon. So if you notice, you see how it's just all over the place, and it's up and over this ribbon, and then it held a trend and then eventually broke the trend. So this would have been really difficult if you identified that this is what's considered chop. You're range bound, but there's some range to that chop. So if you know how to play it and sit on it, these are 50-point moves. So that is what I would say on timing. Again, timing is knowing those 30-minute candles. Are they closing above and below the certain areas? Are they, see how it's wicking up at 9:30? And then same thing at 10:30. Are we making new lows at 10:30? If we would have dropped right here and opened at 10:30 below this pivot, I would have absolutely shorted it, and the odds are this would have been a half back. See how this right here was a move, and then this was half the move, and what they would have done is they probably would have dropped it down into here. That would have been a mid-range push in the morning, fail, and then they come all the way down to the bear pivot. That would have been a move, but the fact that they held this, you're playing within this 100-point range, which is really good. You got to know how to identify the moves, and I'll show those in other videos. There's only three. There's three, or I say three or four. It's you're opening above the bull, that is going to be your zone. You are opening below the bull or bear, and that's going to be your zone. It's going to be your box play. Or you open above bear, and then your first 30 minutes or hour, you're holding above the multi-day, so it's going to trend and go to your ATR pivots. Or I've seen them where you open up above the mid-range pivot, and that's going to give you a ton of momentum, probably to the upside, and you're playing in this zone. So that's how you look at these zones on entering at certain levels. So anyways, I didn't want to make the video too long. That probably was a little too long, but those are my top 3 rules with some extras. Re-listen, re-watch. This was a perfect example today of why the rules were important. Say you can easily get faked out. You can easily, get faked out right here, but there's nothing wrong with you getting stopped out right here. You would have broke even or lost a little bit, but guess what? If you want to re-enter right here, you would have had 50-point moves. Actually, this is from 400, from 330. That's 70-point moves. 70 times with one contract times $20. That's $1,400 right here. That's if you just held from pivot to resistance. I didn't say pivot to pivot. Really, you could have held it from here. Set yourself a stop, and yeah, you would have eventually gone up here, but it would have been another period. You want to be playing in those. Ideally, you want to be looking for like these push-up reversals, because that's when you're going to have violence. But the odds are it coming back down here to go back up here all again is very rare. So you might as well take what you can get. Take your 50 points, 60 points. Sell it, reverse, or just wait until you have confidence in the move. So, all right, until the next video.